Welcome to Trading Lounge and the Indian report for the Nifty 50, and it's the 4th of June. So on the daily chart here, I just wanted to go over a few things here because when we're at the low here for this market and the S&P and all the other markets around the world, we could count the 5 waves down, so we knew that we're going to get a retracement back to the 50-60% retracement level. With the US markets, we've been counting 5 waves up in terms of 1 and 2 and 3 here, and ABC for 4 here, and then going up for 5 here. That's how the S&P's been playing out, and most of the other markets around the world have been playing out as well. We've been conservative in terms of looking at it as an A and a B wave to this point. So now that we're coming up into the last 5 wave structure here to the 61.8% mark at the 10,500, it's time to talk about other counts. So in this instance here, if we look at this as 1 and 2 and 3 here and 4 here, like the S&P 500, and then 5 up here, then we simply, once that top comes in play, we'll be looking for an ABC pattern here and then moving up from that point higher there. The other way to count this too is that this is a bit of a dog's breath in here, a bit ugly, and it can be counted in different ways. We could also count this from this low here. We could also count this up here as 1 and 2 and 3 and 4 and 5 here, which would leave this as wave 1 here, and then coming back as an ABC for wave 2 here. And then this would have wave 3 come into play here. That would take us up further into the 11,500 or even higher at that point. So I'm a little bit mindful of this wave 2 scenario as well. We will just be cautious, and what we'll do is we will do our best to count 5 waves from this low to roughly this position over here. If the market exceeds that, then we will look at wave 2 being in play here, and we'll look even higher at that point there. There is also a case for wave 1 here and 2 here, and wave 1 and 2 here of a smaller degree, and a third wave pushing up. But as always, we just need to stay on the cautious side of the count and stay with what we know. And what we know is that working from this low, we're just looking for 5 waves up there. So that's all we're going to be doing at this stage. Let's go in and take a closer look. So on the 4-hour chart from the low here, we're just counting 5 waves up through here. This down here is also a bit of a dog's breakfast as well. It can be counted as 1 and 2 and 3 and 4 and 5 to here as wave 1, and back for wave 2 here. That wave 2 could also sit on that particular low there as well. There's also a case for having this as wave 1 over here and wave 2 here, and then wave 1 here and wave 2 here, then another wave 1 and 2 here, and that would explain a nice powerful Impulsive Elliott third wave moving up here. So we're also covering that count there as well. So it's just good to be a little bit open-minded. I mean, we're just talking about analysis. We're not talking about trading. We've been long all the way up through here, and we've exited at the 10,000. So we've done fairly well out of this. The market hasn't stopped at the 10,000. So what that normally means to me, obviously it's strong, but what happens is that I normally find sort of 3 patterns that occur at the levels here. So we can look at the classic, well, let's just get our pictures out. It's time for picture time. So this is the normal thing. If we just imagine this is 10,000 here, then when we get to here, we'd have the arrival, and we'll normally see a reaction from there. If that's the case, then we'll see the first high above the level, and then the correction play out across there and pull back below the level again. It doesn't always have to pull back below the level. It can pull back and just sit on the level, the 10,000 here, and move up from that point. This is a little bit rarer, but it's possible within strong structures such as third waves. So we'll be mindful of that. The third pattern that can occur is what I call the overshoot here, where it doesn't stop at here at, let's say, the 10,000, and the market just moves straight through. Normally what I find in this case, though, is that the distance that it moves above the level will normally be the distance that it moves back below the level. and then the 10,000 becomes the balance point throughout the correction. So this is possibly what's happening at this stage here. But of course, the other thing that can occur as well, well, two things that can occur. Normally, if there's going to be a pattern, it's going to be one of these three patterns that I've just mentioned. Of course, on the flip side of that, the market could come up to the 10,000 and then drop and never come back. The other side to this too, in reality, is that the market could just go through the level here and never come back as well. So we just need to be mindful of all the possibilities and then have a plan for them all. If there's going to be a pattern at the level, then this is the one that would be looking at in this scenario here, because it hasn't stopped here, it's just gone straight above the level. So we can rule out these guys here for the time being. So it's just moved on straight through there. So it may run out of steam and then drop back. If it drops back, then we know that we've got the overshoot pattern, and then we'll know what to do from that point onwards. In terms of trading, we've done all the right things, and we have exited here, but you could say, well, why didn't you just exit up the top here? Well, it's not what I do. We just trade from one number of the same degree to the next number. So if you're trading the Fibonacci levels here of 1, 2, 3, and 5, and 8, we would know that if we get support on 3, well, then we'll get to get support on 5 rather, then we'll get to 8 at that point. But we know big numbers act like magnets, so we'll see what occurs across this level. Let's dive in a little further on this one here. I think this is a different count here on the hourly chart. So this is the 1 here and 2 here and 1 here and 2 here, and then building up from 2 up to 3 to 4 here. I don't like the look of that very much at all, but it's there, and you know, we looked at it yesterday. But we'll kind of move on from that as such. Let me just go to, I don't even see what I got on the 15-minute chart. Well, these are our trades anyway. We were long here, here, and here, and we took profit here. So the market hasn't stopped here. If you're going to go long again, you'd go long above these highs here for that. And we're going to be pushing up here higher now, because I know the S&P is pushing up higher, so we can take them up there. I want to go to the tick chart. So we need to get more data in here for the tick chart, say a month. So from the low here, which can be wave B here, it can be wave 4 here. It doesn't really matter at this point, as I mentioned, because, you know, get moving. I mean, Elliott wave is you know, is science, but there's an art and a skill to using it. So going outside of a wave count, you start to get into the guessing game, and the guessing game is not going to make you any money, because you're going to be emotional because you're not sure about something. So you're going to be, when you're emotional, you're going to be making all the wrong decisions. So we just stay with what we know, and what we know at the moment is this trend is really strong, and it's got the behavior of a third wave. And so if we look at this here as 1, 2, 3, 4, 5 for 1 and 2 here, and then 1, 2, 3, 4, 5 for 1 and 2 here, then we're getting into, and then up for 1 and back for 2, and then into this third wave here. Right in the middle of this structure here, that's the third of the third of the third, it'll be the third again in there. So it's the third of the third of the third. And you can see that out of all of this structure, that's the most powerful point in the wave structure. So this count is probably the correct one at this stage. So I haven't spent a lot of time on all of this here. I'm a bit short for time. So if somebody can work that and give me a count back at to send me an email or on one of the social media channels or something, that would be fantastic. But at this stage, I've got it as wave 3 here and 4 here, and then 1 and 2 here, and then looking up as 1 and 2 and 3 and 4 and 5 here. But I'm not happy with that. I'm not happy with this. So I need to do more. I need to spend more time on it. I know that the S&P 500 is going to click a little bit higher, so we can do that as well here. So let me just Just look at this structure here. So we've got 1 and 2 here, 1 and 2, and let me just get this. What I'm thinking here is we've got 1 and 2 here, and we've got 3. No. I mean, it does look impulsive to the downside here, doesn't it? Let me just go into 20 ticks. Let's just check that little guy out. I'm on 100 ticks at the moment. We'll just go into 20 ticks. So we just really want to have a look in this little bit here. Oh, we've got that bit there. Well, we've got 5 waves to there, so we've got 3 here, 4 here. Just don't like that. But this looks like a series of 1s and 2s and 3s here. Some ABC for 4 and down 5. It looks like we've got 5 waves down there, but does that mean anything with this wave structure though? 1, 2, 3, oops, 1 and 2, 1, 2, 3, 4, 5, the third wave, ABC for the fourth, and then the 5th wave up, which is a bit ugly at the top here. I mean, it looks like it wants to go up higher, doesn't it? But we've got this impulse wave here, so that's why I thought we might have a B wave here for this. Well, just keep an eye on it anyway. I don't have a trade set up, and I'm not going to chase this into the top here unless you're just, you know, trading a little bit there. Anyway, look, I need to go back over this little bit here and try and figure out what the count is for that. I'll just go back to 100 ticks and let's get back onto the page and come up with a bit of a strategy for this. So what I'm expecting is this market to basically push up in line with the S&P 500. So watch that. We've still got another little move up and then fold back into the 10,000. So I'm not interested in trading this again until we move back into this position here. Okay, so that wave 4 can be moved out of the way over here. That and that will be part of that. This will be part of this here. There'll be some sort of 3-wave correction here when that tops out there. So this is the thing, you know, I mean, the other point here that's really important is that the trading levels. So we've got on 10,000 here, major level, then we've got 1, 2, and 3 here. If we get a tested support on top of this level, then we're going to go up to 5 at that point. That's what I can tell you. So we'd need to have the arrival here, the reaction, or some type of correction here as such. And then if the market's going to go up, it's going to go like that. Then you can go long from that point. So we'll just pop that in there. This is plan B, this one. Or, I mean, top of group 1, when we're working with the major level here, we're always looking for a correction. If we don't get the correction, the market's going to run away on us. We don't want to miss it. And this is our plan for not missing it. Having support on top of the number 3 here. All these numbers are important, but it's just that 3 there that's important. So that makes up group 1. So a nice tested support on group 1 will take us to 5. And then we look for the same setup here on number 5 here. And then we'll go up from that point. So it's step by step. I just want to see if this ties and pulls back in here, because that will give us our setup at that particular point. So I'll leave it at that. Do I need to recap any of this? So the recap is that looking at this structure, we've been counting it up as an A and a B and a C. That fits, and it could fail from that point and then just drop straight down from here. The Nifty 50, the Bank Nifty would kind of suggest that, because its move up through here is also a dog's breath as well, corrective overlapping wave structures. So so it's possible to finish here at 10,500 and then move lower from this point here. Now, the other point is, if we're going to be tracking the S&P 500, well then we'll look at it as 1 and 2 and 3 and 4 and 5 to here, and then we'll look at it as an ABC back, and we'll move up from there. We'll need to work out if this is corrective enough, but our mode will change into bearish mode anyway, either to trade this wave 1 down or this wave A down or wave C here and so on. So we'll be in a different zone, headspace for that. And the other count too is that all of this here can be counted up as wave 1 here, and back for wave 2 here, and seeing a third wave move up further. For that to occur, we need to move past the 5-wave impulse wave here to confirm that, and also too we would be looking for support on 10,500, a nice solid support, the market sitting on that, and then we can look to go to the upside from that point. It's one step at a time, and we'll trade what we see and we'll trade what we know. Thanks for tuning in, much appreciated.